I just made $6,000 trading a very simple rule-based supply and demand zone strategy. And this video is going to promise you two things. Number one, you will receive a recipe and formula that is backed by over 100 years of data, thousands of trades with a very accurate data sample set. Every single position I take is backed by a very high probability and high quality set of rules. This does not mean you're going to be winning every single trade, but what it does mean, if you master spotting these criteria in the markets, you will have a long-term profit expectancy. Think about it like this. If you're focusing on 2 risk to reward gain per month and you have a $5,000 account, that's $100 a month. That same 2 risk to reward gain goal on a 100K account is $2,000 a month. That is a capital problem, not a skill set and not a strategy problem. Firstly, who am I? My name is Jay. I am the founder of Mechanical Methodology Funded, a business that trades private equity, funded capital, and investor client capital with a proven track record with the exact same set of rules and criteria that you are going to learn in this video. By the end of this video, I'm going to give you 3 things. Access to my weekly live stream trading sessions, my backtesting journal with a huge data sample set that backs my strategy, my live trading journal of all of the live trades that I've taken this year live on a track record spreadsheet for you to learn from and spot these specific criteria that plays out in the market. And thirdly, a free complimentary 30-minute one-on-one call with me where I will fast track and eliminate a lot of the trial and error that many traders go through before they make it. I will leave a link in the description to a free calendar booking link where you can book at any day and time at your own convenience, and I will meet you on that call. With that being said, let's dive into these 2 positions that made me a total net combined of 6% gain, which is a total of $6,000. I'm going to make this so easy for you. Once all 5 of these criteria on your checklist are ticked, you execute. If they're not there, you don't execute. And it's always going to be 1 or 2 of those outcomes. And it's as simple as that. Nothing in between, nothing outside of that. And sticking to a disciplined set of rules is the key to profitability in this industry. This is my simple set of criteria that I have used to achieve about a 65% win rate running net 2R positions, which is extremely profitable. Remember what I spoke about. 2R a month is $2,000 a month on a 100K account. And the question is, can you make money from this every single month? Yes, you can. And this is how you're going to do it. Half of these I've already made done for you. I'm going to show you a tool on your charting platform that is going to show you these exact criteria so that you don't have to go and look for it yourself. Number 1, structure story. So let's go through a live example as I break down each criteria so that you can see it yourself and start trading this yourself. My most recent position on GBP CAD that netted a $2,000 profit. I'm going to break down each criteria on the checklist as we top down this trade. So number 1 we spoke about is structure. You will see on my TradingView platform, if you come over to the indicators tab, type in zigzag, add it twice to your chart. Set the first one to 3 price deviation for reversals and uncheck these boxes. The second one at 0.1. And all this is going to do is it's going to mark out your swing structure and then all of the internal structure that happens in between. Literally pinpointing the exact points that we need to focus on, spoon feeding you the setups. And this is the hardest criteria, is just finding a valid structural range. So just to quickly skim through this: break, pullback, break, pullback, break, strong high, weak low, break, pullback, break, pullback, break, break to the downside, pullback, break, pullback, break, pullback, break, break to the upside, pullback, break, pullback, break, break to the downside. It marks out the exact highs and lows that you need to know for the strategy. Don't worry about anything else. Don't worry about any other noise. Once you have your structure story, which these tools are going to print for you, we can simply go on to the next criteria. Criteria number 2, we need to see a strong high or low being swept or taken out. What a strong high or low is a previous high or low that has simply broken structure. Here, high that broke structure. All right, if we look at this high, look for a previous low where it just broke structure to the downside. So this was a strong high. This was a strong high because it broke structure here. This was a strong low because it broke structure here. This was a strong high because it broke structure here. This was not a strong high because it never broke structure here. This was a strong low that broke structure here. This was not a strong high because it didn't break structure to the previous low. And it's really as simple as that. And what we need to see is price take out a strong high or low? Kind of like we've done now. We've taken out a strong low because this low broke structure to the upside. Okay, if we go back to, for this particular position, these two strong highs here both broke structure to the downside. Price ran them and then broke new structure to the downside. So marked out by this thick gray line was the takeout and then the break to the downside. Okay, so that's criteria number 2. Criteria number 3, once we have that, we just need to see a break of structure in the opposite position after that strong high takeout. So again, simple, strong high takeout, opposite side break, which happened here and here as well. So that happened twice. But already after the first break, the criteria is already valid. To draw this out in more simple terms quickly for those of you that are not quite understanding this, pullback, break, strong low. Criteria 2, sweep of that strong low. Criteria 3, opposite side break of structure after that strong low takeout. As simple as that. So now that we have our third criteria, we move on. We have it checked on our checklist. Onto number 4, an order block, supply or demand zone that has created a fair value gap above the 71 level. So once we have our high that was created after the strong high sweep and the opposite side break to the downside, we now have our range. We draw our fib, follow through to each low. All right, price pulled back here, but didn't come to our 71 level, didn't pull back here. And eventually way down here, we started pulling back into our potential area of interest. So that is criteria 4. The fib level, which I've got placed here, and we need to see anywhere above the 71 level, a candle or a series of 3 candles that has created a fair value gap. So if I mark this out, candle 1, 2, and 3. Candle 1, the bottom of the first wick and the top of the third wick created that explosive volume move right here. So therefore, we have that supply zone, the candle that created a gap. So if we come back to our checklist, we have that order block. Yes, we now set our limits and execute for a 1 to 2 risk to reward on that order block. That is the simple first set of rules. It's as simple as that. We just want to get a 1 to 2 risk to reward off these high probability supply and demand zones. There are ways that you can filter out the poor setups, and this is exactly how I do that to increase my win rate and to increase my overall profitability. And that is looking at fundamentals. So fundamentals is the drive of price, the reason behind the movement of these candlesticks that we cannot see on our respective chart platform, in this case TradingView. So really what we're seeing on our chart here is just really the tip of the iceberg. Fundamentals is going to dive into what the institutions are doing, the commercials are doing, what the retails are doing, their exact net positions, which we can then read to tell us if this market is bullish or bearish. So my first step of fundamentals, I'm not going to dive too depth into this. I have a full course on this, which you're going to receive from me at the end as well. On the daily time frame, on the same pair, first thing I'll look at is my seasonality forecasts. So really what this forecasts is much like us as humans in our year-to-year lives. In the beginning of the year, for some parts of the world, it's summer. We have our flip-flops out. We're at the beach. It's hot. We're having ice creams. And then later on in the year, it's winter. We dressed warm. We're making soups. We're making hot fires. And then again, later on in the next year, it's summer again, and it's a repeat of the same cycle. Very similar reoccurring cycles and repeating cycles happen in the charts, presidential cycles, COT data, various factors that contribute to these cycles. Now, what the seasonality forecast does is it reads all of this information and can predict a very accurate forecast on price. It's not always going to be 100% perfect and 100% timed. So for example, here we saw a bearish run, okay? But this only kicked in about 8 days later. And from here, we saw a bullish run to the upside, but it only kicked in 6 days later where we saw that large bullish run. And it doesn't mean that when this tool forecasts a bearish run, it's going to happen right now. This is an odds enhancer for our overall strategy. So what I could see on my first seasonality forecast, which focuses on the 15-year look back period, a much longer term forecast, is bearishness from this area. So that for me was the one first check for my fundamental bias. And then my second forecast tool, which looks at a shorter term 5-year seasonality cycle. I could see from this area, we're just anticipating bearishness. So once those first two fundamental factors are in alignment, I'll move on to my next more important fundamental factor, is valuation of this market against the economic, what I like to call the economic powerhouse of the world. So what this valuation tool looks at, it looks at the US dollar, the DXY, it looks at the gold market, and it looks at the United States Treasury bonds interest rates. Those three markets together are really the economic powerhouse. Now, how valuation works against these three markets is when any particular market is overvalued or undervalued to those three assets, we tend to get much bigger corrections. So even if I just point this out here, overvalued against the dollar, here, overvalued against the dollar, here, undervalued against the dollar and treasury bonds, here again, undervalued, overvalued, undervalued, undervalued, overvalued here, undervalued here. And if we just mark out these points, we can see that price tends to give these much bigger corrections. Undervalued, this whole area here, undervalued, much bigger correction, into overvalued, much bigger correction, into undervalued, much bigger correction, overvalued, bigger correction, undervalued again, bigger correction, overvalued starting here, much bigger correction, again, undervalued, bigger correction, overvalued, bigger correction. So a very important fundamental factor for my higher time frame model setups is that I need to see on the daily time frame is that I need to see the markets relatively overvalued for shorts and undervalued for longs. Coming back to the 4-hour time frame, our technicals only happen on the 4-hour time frame. Our fundamentals are on the daily and the weekly time frame, which we're going to discuss now. So a really simple way to keep in check with your fundamentals is keep 3 tabs: 4-hour, daily, and weekly. So coming into that, let's talk about the weekly. So on my weekly time frame, I'm looking at the COT reports. Now, to really explain what this is, much like people all over the world that earn an income, they have to declare that income to their regulator of that country. United States would be the IRS. Now, it's the same thing with trading businesses, people, and institutions all over the world. They have to declare the exact markets with their exact net positions that they were in for the last week, or they are in for the current week. So the blue line represents our commercial guys. I'll put a little label here so that you can see that, the commercial guys. And what the commercials are, they are really the smartest players in the market. They are the hedge fund guys. They are the guys that when we see them going bullish, price will go bearish, because they're going to be selling off positions as price is going at cheaper prices. And when price goes bearish, price goes bullish. Why? Because they're now selling off all these positions they've bought at more expensive prices. And that's how they operate to make a profit. They operate very similar to that of a conventional business. Then we have our retail guys. Retail are the non-reportables. You and me and any other person at home that's trading. When we take a position on a market, our positions through our broker are then reported to the CFTC under the non-reportable section. So you fall under here, and I can see your exact net positions and what the majority of you are doing on this market. So I can see on NZD CAD, a lot of you have gone bullish since the beginning of this year, buying this market. Now, how I read this is retail, firstly, understand that they are the guys that are 90% wrong on price. They're 80% wrong of the time. And you will see when they are super bearish at bearish extremes, price goes bullish. When they super bullish, extremely buying hard, price goes bearish. When they super bearish, price goes bullish. When they super bullish at these peaks, price goes bearish. When they super bearish, price goes bullish. And they are constantly on the wrong side of price. So really, to tell you what I'm doing here is, if you're shorting a market, I'm most likely buying. And I am most likely 8 or 9 times out of 10 on the right side of price, because I can see what the commercials are doing. And that's the side of price I want to be on. So you will see when the commercials are at shorting extremes, retail is super bullish, we see the end of those market highs and lows. And this is a very powerful tool that you can use to predict the end and beginning of these lows. So right here, commercials, super bullish at a peak, super bullish on the oscillator, retail super bearish. What did we see? A multi-month bullish run. Vice versa, up here, we saw retail super bullish, commercials gone super bearish on the oscillator at 100% selling power. We saw a multi-month bearish run. So I know at this point in time, I only want to be short with my higher time frame model checklist to be on the higher probability of price. Now, if we look at price, I can see that commercials are super short. Retail is super bullish, super short, entering that 80% shorting extreme on the oscillator. Retail, super bullish. So for the setup, while everyone else is bullish in terms of retail, I'm currently in shorts, making my position higher probability and adjusting my position to the much higher probability side of price. Okay, so once we have our check seasonality in place, 15-year cycle, seasonality 2 in place for the setup. Market was overvalued coming into the setup, check. So that's 3 out of 3 on the daily time frame. Weekly time frame, our COT reports, commercials super bearish, retail super bullish. That is there. So this was a 4 out of 4 fundamental setup, making this an A+ setup for GBP CAD. My supply zone, once that's all in alignment, limits on the supply that created the gap, which was this whole candle here. Wanted to risk to reward. And all you need is 3 or 4 of these high probability setups every month to be super profitable. It's very analyze your charts, set your limits, set and forget, live a life. And that's what I love about this model. Myself, I look at about 25 pairs. I average about 5 to 7 setups a year per pair. If I'm looking at 25 pairs, it works out to about 8 to 12 setups a month. Not all of them are going to be, because a lot of them are going to be against our fundamental bias, which we want to filter out those poorer probability trades to increase our performance. So on average, I'm taking anywhere between 4 and 10 setups a month on a busy month with about a 70% win rate. Position number 2, very similarly to that on GBP CAD, we had a very similar setup on NZD CAD. So here I can see we're just following structure, beautiful bullish structure. We then shifted bearish after this first break to the downside. So all I wanted to see was, in terms of my checklist again, was that strong, did that high create itself after a strong high sweep? Well, if I look at the strong high that broke structure, I can see that if I look to the left, we swept quite a nice previous strong high. So I know there was a lot of institutional involvement in this area in price. All right, we then follow our fib from that high to the low. As price is pulling back, we eventually got our pullback. About 2 weeks later, here was our supply zone, this whole candle that created the explosive move with volume. Okay, when we see these explosive moves in price, especially on the higher time frame, big explosion, big explosion, big explosion, explosion move with a lot of volume. There's only one person and one person only in the markets that can create these moves. That are your commercial guys. Retail simply does not hold the power to be making moves like that. So we know in this area, it's a high probability and a very attractive zone for price to react from. Okay, so now that we have all of our technicals in place, strong high sweep, opposite side break, supply zone with volume above the fib. Simple, in place, right? Now coming over to my daily time frame. We'll start off with the same repeatable process. 15-year cycle seasonality is bearish from here. 5-year cycle, also bearish structure from here. So that's both in alignment. Market was super overvalued coming into this area of price. Again, when we see undervalued, undervalued, overvalued, overvalued, we see those much bigger corrections. So very good. 3 out of 3 on our daily time frame fundamentals. Again, looking at the weekly for NZD CAD, super bearish, super bullish, the side of price that I want to be on. COT commercials were nice and bearish for the setup, while retail, aka you guys, were bullish on this pair. Give a couple of setups I'm looking at for coming into this week. South African Rand, USD ZAR, gonna come over to my higher time frame or my lower time frame 4 hour here. Very nice, strong low takeout, swing break to the upside. Demand zone with an explosive move with volume below the 71 level. As I'm approaching this zone, if I look on the daily time frame, I can see that seasonality is bullish. From here, seasonality is bullish. We are super undervalued, very undervalued to the dollar and US Treasury bonds. So all 3 out of 3 on the daily time frame. If I look at COT reports, commercials, super bullish. Retail, super bearish. We high up in the 97% buying power from the commercial guys, and nothing is kicked into price. So we know we due for a potential multi-week bullish run. So this is also a 4 out of 4 setup. Another setup I'm looking at is odd CAD shorts. Not as high probability because we have a few things missing, and I'm going to break this down. Odd CAD daily time frame. So I can see that, firstly, seasonality is bearish. We're bearish from here. Valuation, we're really in the median. We're not really overvalued or undervalued. What I like about it is we are coming from an overvalued market where nothing has happened in price. So I gave on the daily time frame a 2 out of 3 valuation missing. And then if I look at COT reports, the commercial guys have actually just gone bearish below the retail. So commercials are shorting, retail is starting to buy, which is good. But the only thing I don't like is that commercials are still overall net bullish with 48,000 contracts. Retail, 1,140 contracts. But the number of contracts is not really that important. It's what they've been doing prior to their previous trading actions that really makes the moves. So again, here we had a nice peak form, we saw a multi-month bullish run. Okay, and here, big shorting power, extreme peak. We haven't been super bearish since October, which has been the highest point nearly in the last 10 months. So for the setup, they're starting to go short, but not net short yet. I like the fact that retail is still busy buying against the commercials. So I gave this really a 2.5 out of 4 fundamental setup. So it's still not bad. To go over technicals quickly with our checklist. High that broke structure, swept that strong high, new break to the downside. Candle, explosive move with volume above the fib. So all 5 criteria is there in terms of technicals. 2 positions that I'm currently in right now, GBP, JPY shorts. So again, looking at technicals, a high that broke structure. We took that high out and then broke structure to the downside here. So there was actually a little internal setup here. But in terms of swing, we then broke swing structure to the downside. Now, as we were pulling back, our technicals are in place, supply zone, explosive move, volume, lots of volume in the leg with a strong explosion, with a good probability supply zone. Coming to the daily time frame, I can see that coming into the setup here, right here, we bearish. Right here, we bearish. So both seasonalities are aligned. As we approached this high, we came into a very overvalued market, which was also there. So all 3 out of 3 on the daily time frame. Then looking at my weekly COT, what do we see here? Retail's bullish, commercial is bearish. And if I look at my oscillator, which just helps you time the COT reports, commercials, super bearish, nearly at that 80% extreme selling power. Retail, super bullish at the 90% buying power point. So again, while everyone else in the retail side space, which is you and me and various other people all over the world, are busy buying, I have now entered shorts because I can see this information and I can use this to my advantage, which was then entry on the supply zone. We're currently just over 1R in profit. I'm currently break even on this trade. The second position I'm in is silver, XAG, USD. So in terms of swing setup, we swept a swing, strong high. That broke swing structure to the downside. We took that high out. New break to the downside. I can see here strong explosive move. Supply zone with a lot of volume. The immediate candle that only had volume just above the fib. So our technical criteria was there. Then looking at fundamentally on the daily, from here, we just bearish. From here, we just bearish. So both seasonalities are aligned. Market was super overvalued, extremely overvalued as we just tapped in. So very good confluence for a much bigger correction. Okay, so 3 out of 3 really clean on the daily. And the only thing that was not in alignment on silver is the COT reports. So right now, the commercials are actually super bullish. Retail is super bearish at that 100% buying power, nearly 120% selling power. So the reason why I went for this position, because we still had a 3 out of 4 alignment. I was with the goal of being more aggressive on risk management because I know because they're super bullish, this is probably just going to be a shorter term correction before going overall bullish. Okay, so therefore also 1R at break even, now a risk-free trade. If you guys want to fast track the trial and error and any confusion with this model and spot the setups from day one, backtest them successfully from day one, and execute them live successfully from day one, the first link in the description will take you to a free one-on-one call with me where I can work personally with you, identify where you are as a trader, more beginner, intermediate, or even expert, and really personalize and tailor make that experience for you to fast track that progress, which will take you to a page that looks like this. You can book completely free, select your day and time, for example, Saturday or Sunday, and you'll be able to select your time from any of the open available slots. The second link in the description will take you to a page where you can get access to my fundamental tools on TradingView, where you get access to my COT reports, index valuation, true seasonality, the structured tools as well, which is already there for free, and then also I must change this, a 1 hour one-on-one call coaching with me, bonus additional added at no charge, where I will break down and teach you how to use these fundamental tools in a far more in-depth one-on-one call. The third link in the description will take you to my free community where all of my backtesting data is here. My entire live trading journal is here where you can see all of my live trades I've taken this year, access to my limits that I set, what I'm tagged in, and then the results of those trades. Also some of the student results, a bunch of guys that have gotten payouts and funded. I have created about 80 funded members and well over 20 payout members in the first 2 months of 2025, using the exact same sets of criteria that I have showed you today. There are more than enough free resources in the description below, a free one-on-one call, free course program, and free live trading. Why, you may ask? Purely because trading is my full-time job. I make way more from trading than trying to sell courses and do the whole social media marketing thing. And honestly, I just don't have the time for it, as I'm busy with other ventures in my trading business as well, in the more conventional and corporate world. And this is more a documentary of my own journey that you are welcome to join. So without further ado, take care. I'll see you guys inside and see you in the next video.